It looks like it's gonna work, right?
Yeah.
Okay. So you're there. Why would Mercedes vote? But you know what? She might work for the state now.
Um, I remember seeing the name Mercedes.
Now, do I have to mute or they're gonna mute?
I think they will.
Good girl. Gonna learn about taxes, the two of you? Mhm.
Talking to Missy Toes.
Yeah, she's there and Tyrion's in the other bed next to her.
Oh. No, 25 or 26. Okay, see you later. Bye.
You're muted, David. Are you talking, David? Can anyone hear me?
I hear you, Denise. Okay, and can
Okay,
people
there
hear
we
me
go.
now?
Yep.
All right. Excellent. Apologies for some minor technical hurdles there, but again, good afternoon, everyone. Thank you for coming to the South Dakota Basic Sales Tax Seminar for this quarter. Uh, I'm David Higaki, a senior revenue agent with the Department of Revenue. I also have Denise here as well too, who will be my co-presenter, taking over things about halfway through. So first thing I want to let you all know is that this is just for your information to give you an idea of what South Dakota sales tax looks like. Do you need a tax license and why? Kind of go over those details. This is not personal directed information regarding your business for tax law purposes. So if you need any questions for specific situations, please reach out. You can message myself or Denise as contacts for the email. We also have our business tax helpline you can reach out to and a business tax email line. So plenty of ways to reach out to myself, Denise, or one of our coworkers across the state for your sales and business tax related questions. We're going to go through about roughly transition halfway through. Denise will take over the latter half. We'll have a short break in the middle of this too to give everyone a chance to digest everything you've heard, take notes, ask some questions in chat if you need to, or if you just need to have a little restroom break or something. If you have any questions, please use either the raise hand thing within Teams, put a question in chat too. Denise or myself will kind of follow up with those throughout the presentation as we're going over this. So hopefully people are seeing this slide now that I've got this working right for who needs a tax license. Is that a yes, or is that the slide everyone's seeing? All right, I think so. Excellent. Thank you. So the tax license in South Dakota is required. Oh, what was that? Okay, thank you. Just wanted to make sure it's my first time trying to use this presentation tool with PowerPoint for Teams. So I wanted to make sure I'm not missing anything with that. The tax, South Dakota, we do have a sales or excise tax about anything you do within the state. If you're selling physical items, if you're selling digital or I don't say imaginary items, but things like electronic files, we tax that. Any kind of service, whether it's hairstyling service, repair service, construction work, we have tax licenses for that. And there's also taxes required for use of things that come from out of state into South Dakota if tax license hasn't been applied. This is required whether you're physically in the state or if you do enough business to justify that. So let's talk about the different types of requirements for a tax license. Our determination for this is called nexus. The nexus is basically what gives the state the authority to implement its tax laws for you or your business here. There's two forms of this. The first one is physical nexus, where you are doing business in the state physically for one means or another, thus you are subject to our tax laws. We also have an economic nexus, which was designated in a Supreme Court case about a decade ago between South Dakota versus Wayfair, which established the authority to have rules in place that if your business does enough work within South Dakota, you are subject to our tax laws, regardless if you've ever set foot in the state or not. Physical nexus is generally the easiest thing to determine. If you have your business in South Dakota, whether it's you have a restaurant, if you have a workshop of some sort, or you're doing cleaning business, if you're physically in South Dakota, you have to have you're subject to our tax laws there. But there's other ways to go about it too. If you have workers for your business physically in the state to do work, that makes you subject to South Dakota sales tax laws. If you have representatives like sales agents, that still counts, even if they're not actually doing any of the work themselves, but they're arranging the work. That still creates this presence. Even sending leased equipment, where if you're sending your stuff over to South Dakota, but in that someone else is going to do work with, but your company's still going to own it at the end of the day, that creates a physical presence still for that. So there's more than just physically being in South Dakota to acquire this physical nexus. That means that you better reach out to us to apply for that South Dakota sales tax license. Now, economic nexus, again, is the newer form of acquiring a license. It used to be required 200 transactions or $100,000 with sales within a fiscal year. Now it's only just $100,000 in sales. The state legislature dropped the minimum transaction requirement. So if you do $100,000 of sales, you're required to get a tax license with us, even maybe non-taxable sales. This includes wholesale transactions, sales to exempt entities like the state government. If you still exceed that $100,000 threshold, you still need to apply for that South Dakota sales tax license. Do note, each state may have different variations of what economic nexus looks like. So if you are outside of South Dakota and your state has different requirements, you may want to keep that in mind. But for us in South Dakota, it's just $100,000 in sales requires this as well too, even if you don't have that physical presence we talked about. As I mentioned before, we do have a variety of tax licenses. The primary one I'm going to talk about is a sales tax license. This where, again, if you're selling things for money or services for money, that's the license you're going to need. We also have a couple of variations of this, the manufacturer's tax license and wholesale tax license, which basically our sales tax license with a little bit more guided purpose for our back end here. The manufacturer is basically for those who are producing things for others to use, while wholesalers, again, it's just designed to sell to specific to retailers for the vast majority of all of the business. Now, we also have a contractor's excise tax license that we're not going to get into too much other than saying a business is either subject to contractor's excise tax or sales tax, but not both at the same time. All right, whoever just jumped in, hello. Please mute yourself so you don't have that nice little echo. I don't hear my voice that many times in a row. The contractor's excise tax will be a separate seminar in 2 days. I'll be presenting that one as well. If you're curious about that, feel free to sign up for that too. We also have a use tax license, which we'll talk a little bit more about what use tax is, but the general thing about use tax is it mirrors a lot of the sales tax laws and information, including the tax rates as well too. Again, the business is generally not going to be subject to both sales tax and use tax, but the two will tie together as we'll explain a little bit later. The South Dakota sales tax rate, the bare minimum for any transaction that is sales taxable in the state is 4.2%. It used to be a little bit higher a couple of years ago, but as of right now, it is 4.2% for all physical item sales called tangible personal property, or TPP as we noted, electronic property, again, digital files or digital photos, that kind of thing, and services of any kind, except for construction services, which again falls into that contractor's excise tax that I mentioned earlier. Now, when we're considering what is subject to contractors to South Dakota sales tax, we're generally considered the gross receipts for the transaction. So what does this include? This is basically the subtotal in most cases of the value of the service, any parts or items that are sold as part of the transaction too. But there's other things such as bartering. There are also delivery charges, we tax that as well too, credit card fees, and other charges that may be put on there that aren't mandatory required taxes. Now, there's a few things we don't subtract from this. If you have trading credit involved, I used to work at a video game store where it's very popular to trade items in to help reduce the cost of your items. That was that's not part of it. That gets subtracted out before you get to your subtotal on sales tax. As I mentioned before, Any mandatory fees don't get put on there too. And by mandatory fees, I mean, this is like, sorry, mandatory taxes, such as there's a tanning fee, I think 3% excise tax that the federal government requires. If that puts it on the invoice, then that's not part of the taxable fees. Discounts that the store may do also aren't included on it. So if you're going to a store, you buy a sweater for $40 when it's on versus normally 50 because you got on sale, then tax only on the 40. And lastly, certain banking transaction fees, such as insufficient funds fees, are also not subject to sales tax as well, too. Again, this is to reinforce that I mentioned earlier, any required taxes that are put on the invoice that are passed on, that doesn't get included in your gross receipts. The other example you may see for this is if you check your cell phone bill, there's a 911 responder bill. I think that's the thing there. And yeah, that's federal government thing. That doesn't get taxed on there either. Interest doesn't apply to that as well. This is mostly going to be for some of the banking industries. Most of you guys are here probably aren't going to see the end of that, but just showing you a few more examples of what doesn't go in your gross receipts. Now, one thing I want to let everyone know before I carry on is everything we're talking about here and we'll be talking about, we have guides for a lot of this too. If you go to our Department of Revenue homepage and check out information for business taxes, we have guides for gross receipts, which is basically going to give you a little bit more detail on what we're talking about right now in this kind of high-level seminar here. We also have a sales and use tax guide. Again, it's nice broad information on all this that's happening. So feel free to check out those resources as well too if you want any more specific questions. For copy
David?
presentation. Oh, yep. I see we have some questions. Yes.
Yeah, there is a question here. It says, if we reimburse an employee for a purchase, we pay sales tax on what we reimburse them for, even if they paid for the tax at the time of purchase.
General answer to that is no, but depends on it. There's certain gross receipts which are marked as reimbursable expenses. This is specifically for attorneys and engineers as required by state law. So if an attorney is buying something and they're going to get reimbursed the client for it, they don't need to include that in the gross receipts for taxability purposes. But if I'm let's say a house cleaner and I'm buying cleaner for doing my services, I'm going to charge my customer cost for that. I don't get subtracted out. That's still subject to sales tax.
And Corinne, I will email you a copy of that right now of the presentation. It should have been sent to you when they verified it yesterday or today. That should have been attached to there. Did you possibly sign up late today? Or if you go back in your email for the invitation type thing for this presentation, there should be a copy of that presentation there. But I certainly can send you one.
Thank you, Denise. The recording, I will have to double check on that one, especially since I know there's been a lot of dead air the first half of this. I think what happens is this will, as I've seen before in other years, is that a copy of this may be posted to our South Dakota Department of Revenue YouTube page, and you can check it out there for a follow-up. I will double check this.
Yeah, Lori edits it out. So she'll be editing it when it's over. She's the one that handles the recording, and then it'll be available. She'll actually send like a link that you can go ahead and click on. She'll be sending that to everybody.
The link will be in the same email that you registered with, that you should get that back to. If for some reason you didn't get that email, because I did have a few people message me on, hey, can I get a copy of this link for this person? Then reach out to us to double check, make sure we have that correct email address so you do get that information. All right, anything else? Feel free to ask questions because this is your time to figure out things, and we have 3 hours. I generally get done with this in roughly an hour and a half, 2 hours from my previous experiences here. So we have a lot of time to ask questions or figure out small details if you have those come up. So please reach out. All right, with that, let's carry on. So something else that you don't get to do from gross receipts too. You don't get to remove, your cost of doing business. If you sell a hamburger for $10 and it costs you $4 worth of ingredients, you don't get to report, oh, that was a $6 sale. You sold for 10, the tax is on the 10. Other expenses too, including losses and other things, don't get deducted out from that as well too. And other things such as delivery charges or credit card fees, you do not get to deduct out as well too. So the general rule of thumb is if whatever's on the customer, whatever that invoice charges or receipt cost is, that's subtotal. That's what we're going to base your tax off. We don't get to subtract any of those cost or operational fees from those your receipts when you're reporting your taxes. As I mentioned before, delivery charges are subject to sales tax. Whether this is something because you're just physically going over to a location that you're making the delivery, or using a third-party courier service and you're charging for the cost of having either UPS or postal service deliver items for you on that. Whether it's on your receipt, you're putting on a paper invoice or something, if there's a delivery charge or mileage charge or anything like that, it's still subject to sales tax. The exception is if what you're doing would be not subject to sales tax, the delivery charge also too. It kind of mirrors if we don't make the delivery charge taxable just because you're selling to, say, a piece of equipment to the state would get tax exempt, the delivery charge would be tax exempt in that situation too. Now, it does get a little bit trickier if you have both on the same invoice, or if you have taxable and non-taxable products. We often see this for those who are in delivering agricultural related goods, where farmers and ranchers can get some things sales tax exempt because they're allowed by state law. So they need to look out to get livestock feed tax exempt for the horses and cattle, but they're also ordering dog food, and again, that ordered at the same time. Dog food isn't considered a livestock thing, so that's subject to sales tax. So if they're ordering that's from online vendor and can shipped out, part of the delivery charge for the dog food portion to be subject to sales tax, but the rest of it wouldn't. We either can use the percentage off the sale or you're allowed to use the weight percentage if that's how you're measuring it too. There's, as long as you're using one of those methods determining, oh, hey, the sales tax delivery charge of $40 is only, say, based off the 10, because a quarter of it is for the dog food, then that's fine. Just have to have some sort of system between those two methods that the state law allows you to use for that. If you do not itemize, though, what's taxable and non-taxable, then the whole thing comes subject to sales tax for the delivery charge on that. You have to have it itemized out so we know from the determination what is subject to sales tax to confirm that. Something else I mentioned before is, we have a question here. I'm going to read this. If you provide tangible products and services, do you need 2 licenses? No. We do use our sales tax license, which covers both product sales and services too. Also, you can report use tax on the sales tax license. The only reason we have them separate is because there's some industries, such as a lot of medical industries, that will never have sales taxable sales, because by state law or federal law, those things are subject to sales tax, but they may have a use tax liability where they're ordering certain pieces of equipment, whatever, where a use tax will come up, and we need a mechanism for them to pay that in regularly. So good question on that, Melissa, but you only need 1 sales tax license to do both sales and service. So if you are a hairstylist that you're doing your hair styling work, but you're also going to sell some of your styling products as well too, just need that 1 tax license for that. Don't need to make things more complicated than that. Now back to bartering. It is still subject to sales tax, even if it's, again, there's maybe no money on hand. So let's say you're doing a lawn mowing for someone, and instead of getting paid cash for it, the person has a bunch of produce from their own home garden, and they pay you in vegetables. Sounds like a delicious deal. Sales tax is still owed, in which case it's beyond the fair market value of that item, and that's what you would base your sales tax off of. We also see this with contractors that may do work for people, again, not get paid in cash for it, but get paid in some other form for their services. The same principle applies for that too. If you check out our excise tax guide, it's our seminar in a couple days, we'll talk about the same situation there. Now, if there is a return merchandise, that gets subtracted out. We don't consider returns as part of the gross receipts, as long as the tax dollars are also returned as part of that too. Often we'll see retailers will just short their net sales when they're reporting the gross sales for that. But sometimes it can happen where your returns for items may result in a negative sales layout, in which case you would put that as a non-taxable sale, just kind of subtract that out. If it happens, you would get credited the sales tax difference to use on your next return if that were to occur. But in our case, yeah, we don't, if you return a product or item to a customer and refund them and include the tax dollars, then yeah, you could subtract that out. We don't tax returns. Coupons are a little bit different as far as discounts. There's two ways that coupons typically occur. They either come from the store itself or they're coming from the manufacturer for a discount. If the store's offering the discount, then again, I mentioned example of buying a $50 sweater for 40 bucks, then that just reduces the taxability because it's based off of $40. That was the sale. However, if it's a coupon is coming from the manufacturer. So if you go to a grocery store, you'll often see these little pull things where it says manufacturer's coupon for, 50 cents off a can of soup or something. Those, for as the store is concerned, the whole thing subject to sales tax, they're just going to get reimbursed that 50 cents in that example from the manufacturer. The selling price is still what the original selling price is from their perspective for tax purposes on that. So depending on how you go about things, the taxing may be a little bit different, but general, again, if it's your own store discount or your own business discount, not subject to sales tax, you're just reducing the selling price. You're not getting reimbursed for that. So there's no additional compensation to try to convert the tax on. Now, so far, we just talked about the state sales tax with things, but as most of you know, in South Dakota, we also have municipal taxes or city taxes, where they're more commonly known as. South Dakota state law allows each municipality to go up to a 2% city tax. Most cities do have that 2%, but there's a few weird ones out there that only have 1%, or I think Quinn, South Dakota is 1.95 for some weird reason. So the general rule is it's 2% for that, and that applies to anything subject to sales tax within the city limits. Also gets to the 2% municipal tax too, if that's the case there. This is based off whether you're receiving the item there or using the service within city limits on that. We'll show a little bit later, but if you're not quite sure what attaches to city limits, we do have some tools to help you out with that. Now, as I mentioned before too, there are some exceptions for certain taxes. Those, if something's not subject to sales tax in the state, it's also not subject to municipal tax. But beyond that, we have a few other exceptions. One is passenger transportation, such as taxis or tour buses. If at any point the tour or travel leaves city limits, then we don't have any municipal tax, because one of the reasons is, what if you're going to multiple cities? How do we tax that? How do we do a percentage? It's just much easier to say, no, we don't want to bother with that. So for passenger transportation that goes outside city limits at any one point, if you come back to city limits, then there's no municipal tax added to that. Farm machinery is also exempt from this city municipal tax as well too. We call that an agricultural equipment excise tax, or farm machinery excise tax. We're basically just caps it at 4.2% rate when something purchased purely for agricultural purposes, such as tractors, combines, those kind of things. That falls into just that 4.2% only, regardless if you see item in city limits or not. Also, certain amusement devices, such as coin-operated jukeboxes, arcade machines, those things, those are also just subject to the 4.2%, in this case, amusement device excise tax, versus a potential state tax that may get tacked on there as well too. Now, for some things, you may need documentation to back that up, particularly for the farm machinery ag excise tax. That usually have some documentation to confirm, yep, I'm buying this tractor purely for agricultural purposes and not using it to just do hay bale rides for my church, for example. Now, on top of that, there's also a specific type of tax called a municipal gross receipts tax. Some places you may have heard as a bed, booze, and board tax. This is a special 1% tax that the cities are allowed to implement, optionally, mind you, on certain things. It could be alcoholic beverages, eating establishments where you're eating something immediately for consumption, like again, restaurants, lodging, whether it's being campground, hotel, motel, as well as admissions or to certain events, whether it's a sporting event, concerts, hacking bowling alleys. All of that may be subject to municipal 1% municipal gross receipts tax. Now, what's fun about this is each city may or may not have that, and each city may not add it to each one of those things there. There's some towns that may just have an alcohol and lodging, may not have it in restaurants, or may just have it on admissions or just on hotels. One thing to help you out this is we have tax guides for this stuff, and we do have a municipal tax guide which shows you every town in South Dakota that does have a municipal tax, and also lets you know, is there a municipal gross receipts tax and what those rates are or what do they cover. So if you need that information, please check that out. These municipal tax rates are allowed to be changed every 6 months. Each town can say vote on to either add it or remove it or change it as one. They go and do it once every 6 months, which will go into effect either January 1st or July 1st, depending on when they make their submission. Now, when you're reporting this, though, you have to report each one of those taxes differently. The reason being is that when you file your sales tax return with the state of South Dakota, you also report your 8 municipal city taxes as well, too. So you have to break that down. If you do $1,000 worth of sales, and 500 was in Rapid City, and 400 was in Spearfish, and 100 in Box Elder, you need to note that. So the state makes sure we can divvy up each of the tax dollars to each city appropriately on that, too. Also, the municipal gross receipts tax are also reported and noted differently on there too. One, because it's a different tax rate, but also because the cities are only allowed to use those particular municipal gross receipts funds for specific things there. So they kind of caps into what they can use their tax dollars allocated for. They can't exceed those limits if they didn't vote on that accordingly. When you're looking at this, is kind of give an example of what it looked like on our paper return. When you're using your online forms, which Denise will talk about a little bit later, this is broken through multiple pages, and she'll go over a little more details on how that will look like. Now there's another tax type we have to talk about called tourism tax. Tourism tax is a special 1.5% tax that gets added in certain situations. The most common thing is you're going to see it is on lodgings for hotels and campgrounds, but also applies to spectator events such as the Sturgis Motorcycle Rally, where the population state will often increase by 50 to 100% within that 2-week period. That's a giant spectator event, and all visiting vendors who show up for that are subject to a 1.5% tourism tax on top of the state and potential city taxes as well too. But this comes up in other ways. Visitor attractions such as museums will see that 1.5% tourism tax get added to their receipts or to their taxability there. Recreational services such as renting ATVs. You'll see that motor vehicle rentals, those are actually the highest tax rate things that we have in the state of South Dakota for motor vehicles, and part of that's the tourism tax. Lastly, depending on your business type, you may be subject to a 1.5% tourism tax for all sales for the months of June through September if depending on your type of business, and if 50% of your sales for your business are within those summer months there. For the visitor-intensive businesses, it's only certain industries such as gift shops, candy shops, and some things where it gets like, they're only open some January anyway. That's what's subject to that. We do have a tourism tax guide, again, go over all that stuff. And there's a list of what we consider a visitor-intensive business. So you can double check, hey, is my business going to fall into that? If you're still not sure, give us a call, especially if you are getting newly licensed. We're probably going to talk to you about that anyway, just to make sure you're aware, so you can tax your customers appropriately and then send them money to the state appropriately too. One thing to know about this is even if what doesn't count for a business-intensive business, or if even is on a tourism taxable area, are restaurants. A restaurant at a hotel isn't subject to the tourism tax if it's a separate area where, oh yeah, this is where the restaurant portion is separate from everything else. In that case, then those particular receipts don't count for tourism tax, while the rest of the, say, a hotel or campground would be subject to that. Same thing for the visitor intensive business too. If there's a separate restaurant attached to it, say a restaurant attached to a candy shop, the restaurant gross receipts, again, as long as it's a separate distinct area, would not be subject to the tourism tax. The one exception to this exception would be Stores More Soccer Rally. The visiting food vendors for that are subject to it because that falls under a spectator event and not either hotel lodging or visitor intensive business. This is just letting you know that just in Sioux Falls, they got grandfathered in for a special 1% tax that applies only for hotels and campgrounds within Sioux Falls city limits. No other city and state has that. That's under our special taxes page, which on their ePath website, or otherwise there's a special code for that if you're filing the paper return to report that special 1% Sioux Falls lodging tax. So as I said before, we have a tool to help you double check the municipal gross receipts, and this is called the sales tax rate lookup. This is going to be available on our Department of Revenue homepage. Right on the main page, there's an option that says sales tax rate lookup, which takes you to this lovely page there where you type in an address. It lets you know what matches are available, and you select your match. It pops up on a satellite image, and down to the right tells you what that tax rate is. It's a pretty slick tool. It's very useful, especially for when you're double checking or you're not sure in city limits. Great way to double check that. That being said, it's not 100% perfect. It still has, there's new developments that are popping up everywhere, and maybe so new it hasn't caught up to our GIS software that we use as the base for our sales tax rate lookup website. So if you don't find it in there, what I do is I'll find up a nearby address, pop that up and kind of compare it to, say, Google Map to see what it seems to be overlapping the city area or not. The other thing I want to let you know too is you should be, when you're charging for municipal tax rates for your customers, you should be as accurate as possible for that. But I do have some businesses such as websites where, depending on the software tool, may not be the smartest with that. We want you to be accurate with things. If worst comes to worst, though, it's better to charge city tax and slightly overcharge a customer sent to the state versus not charge city tax, find out, oh, that wasn't city limits, you're supposed to pay that, collect that, and then you have to owe that to the state anyway, and you're getting it out of pocket. But first, please, try to be accurate as best as possible. For those with using websites, there are some tools to help you be accurate with it, but the one thing we'll let you know is do not use a zip code only system. There are some areas such as Blackhawk and Somerset that will share a zip code, but Blackhawk's unincorporated, there's no city tax, while Somerset, South Dakota does have a 2% city tax, but they both share the same 57718 zip code. So that's not a great tool all on its own. Now, I talked about use tax just a little bit earlier, and use tax is triggered when sales tax was not applied on the purchase or service that you're using within the state of South Dakota. The most common form we'll see for this is online shopping. The big websites like Amazon, eBay, Etsy, they're going to charge you sales tax on your purchases there, so that's not an issue. But when using some of the smaller websites, that some of them are licensed with us, many of them aren't. And if you take a look at your receipt and you go, oh, there's no sales tax on here, then you know you're going to be owing a use tax on that too. Instead, the use tax, the same rate as they have you bought it locally based off of where you receive the item or where you're using it, whichever is higher. So if you live in Rapid City and you order something from cheappowertools.com, and you get that receipt and you go, oh, don't see any sales tax on there, your use tax would be 6.2% because if you were to buy your item from, Target or Menards or wherever in Rapid City, you would be charged 6.2% sales tax anyway. This will be just catching up after the fact. Now, there's other ways this goes about too. This can be from so this goes back to what I talked about for the economic nexus. If those smaller websites aren't doing $100,000 worth of sales in the state of South Dakota, they aren't legally required to get the South Dakota sales tax license, so they cannot charge South Dakota sales tax because they don't have a way to send it to us. And if they are charging South Dakota sales tax and they're not remitting it, that's a big deal we have for that on the website. But generally, they're not going to charge that sales tax. But that will also then run the risk of the purchasers in South Dakota who are getting those items, they're going to owe the use tax instead. So it just shifts the burden from the small business to the consumer. The reason for this is just because when the ruling was made with South Dakota versus Wayfair, we wanted the high economic threshold where we only wanted to really bother the time for the businesses that are going to be doing enough sales South Dakota where, yeah, we're actually worth going after those dollars for, and not, the small person may having their own little Shopify website over in South Carolina that may maybe do $10 of sales in the state of South Dakota in any time, but not enforce them to have a South Dakota sales tax license, or from their perspective, a tax license in 50 different states. So that's why many states have such a high threshold. So that requires the smaller online businesses that are up and coming to require 50 tax licenses all at once, which would be a huge burden on those small businesses. So you're welcome, Alejandro. Now back to use tax. Yeah, that will create the use tax liability. But there's other ways it comes about too. When you make purchases from outside of the South Dakota, physically in our state and bring it in, you may run the risk of use tax if the tax paid weren't equal to what we pay in South Dakota. This is the most common with Montana, as a nearby neighboring state where there have no sales tax there. So if you buy a power tool in Montana, you're bringing it over to work on a job in Rapid City, South Dakota, you're definitely going to owe use tax on it because I know you didn't pay that with sales tax, or in Montana. But Wyoming is also a common trigger too, where they have a sales tax rate, but generally it's less than what we have in South Dakota. Now, as far as the use tax determination, it's based off what the taxable invoice would be. This also includes any delivery charges that may be on there as well too. All things that may include would be services purchased from out of state. So I have a lot of new business people who moved to South Dakota. They had a business where they used to live, and they have an accountant where they used to live too. And the accountant is now still working for them though. So now they have to base it off of South Dakota, but that accountant doesn't have a South Dakota sales tax license. They can't charge the customer South Dakota sales tax, which means the business now is receiving a service, but aren't going to charge sales tax. They now use tax on it too. So it's not just physical items, services that are untaxed may also trigger this as well too. And just as before, if something's exempt from sales tax, it's also exempt from use tax too, because again, the two taxes are kind of mirror each other very much for how they work out. So for use tax liabilities, again, we'll see this on a lot of things there. Promotional items are a very common one too, where people think, oh, hey, I can just give away these t-shirts, and they'll go from an online vendor or locally and get some t-shirts for cheap. Don't pay tax on it. They're giving it away. Yeah, there can be use tax owed on that too. Donated items can trigger use tax as well if sales tax was not applied on the resale cost of the item there. We'll talk a little more about that, but if you have a fundraiser, you're being given items for the fundraiser to either raffle off or as door prizes or for silent auctions. If those items didn't have sales tax applied to purchase or use tax not paid on it, then there's going to be some tax issues for the fundraiser. So for use tax as well, this is getting just more examples where this is going to come up here. The biggest thing I want you to take away from this is generally, if you're something you're buying without sales tax, but you're going to be using it for your business, and it's not going to be a product or something you're outsourcing to your customer, there's going to be use tax available on that. I want you to be aware of it, so if you see it, you can report it, because again, you can do this on your sales tax returns, but if you're not quite sure how to do it, I just want you to be aware of it. It's like, this looks weird. I better talk to someone in the Department of Revenue to make sure I'm going to report that correctly, because most people fall into use tax unintentionally. Heck, I've actually reported myself for use tax. I bought a crib. My wife bought a crib for our baby 3 years ago when we just had her, and she got it from a website I've never heard of before. A small website, didn't have a South Dakota tax license, so yep, there wasn't any charge on that. So I filed a self-reporting use tax return and paid about $20 use tax on that crib. Because yeah, it was an accident. It's not like we tried to avoid paying South Dakota sales tax. It just happened all the same anyway. So I just want you to be aware of it. So if you see it, you know you have to do something about it. You're not quite sure what to do until you start filing. Just set those invoices or receipts aside so you can take care of that appropriately. Now, I mentioned the out-of-state purchases for use tax. We do give credit in most states for purchases outside of South Dakota brought into the state here. In those cases, it's called reciprocity, where if you buy something from, say, Colorado, we have reciprocity with them. So it's the minimum Colorado tax rate, I think, is 6.5% off the top of my head. That is higher than our South Dakota sales tax, even include municipal tax. So if you buy something in Colorado and you bring it back here, we're good with that. There's no use tax liability. But if you bring something in Gillette, Wyoming, where I think the sales tax of Gillette is 5%, and you bring it to Rapid City, South Dakota, where the sales tax rate with municipal tax is 6.2%, you will owe a partial 1.2% difference on those items there. In which case, going back to the Colorado example, we don't give you credit back if you think you consider you overpaid, because if you paid something 6.5% sales tax in Colorado, that was the legal tax rate for that. You are that was a-okay for that purchase. And if you bring South Dakota later, we don't give you that 0.3% back on that situation there. Some other states do have similar things for this. We don't offer that though in South Dakota. The other thing to be aware of too is, again, this also includes any delivery charges or other supplemental fees that may be on the invoice. So it's not just the product, but anything that goes along with that product, such as optional warranties like product replacement plans on items, or again, delivery charges, the common ones that you may see. That is going to be subject to the same use tax or partial use tax if that does come up there. Now, most businesses, you're allowed to do something as exemption from use tax called purchases for resale, where you don't want your supplier to charge you sales tax on those items because you're going to charge your customer tax when you sell it to them later. That is allow you to cut the tax on the middle there, so you're not paying sales tax multiple times throughout the product life there. That's okay. However, if you buy something for resale and you end up either giving it away or using it yourself or using it for the business, that will trigger use tax as well too. A common example for this are, again, hairstylists. A hairstylist that has products for sale, they can get the hair products tax exempt. But if they're working on a customer's hair and realize, oh no, I'm out of shampoo, and for their normal cleaning services, they may take a bottle of shampoo from their selling inventory. They can do that to take care of the customer, but then they will owe use tax on that item taken out of inventory, because at that point they didn't sell it, and it's the whole point of getting something exempt for resale there. Also included in these examples would be samples. If you have gone to a restaurant offers free samples for certain items there, if those items were purchased with or were made from ingredients or purchased sales tax and for resale, that will also trigger that use tax liability as well too. Also giveaways too. If let's say, for example, a store is trying to drum up a little business there, they're offering a free book at one customer for every 20 transactions as from their selling inventory. That will also trigger the use tax of those items that are being given away but not sold. Now, there is another exception to use tax, and this is on the age of equipment. We have what's called a 7-year rule within the state, where if your equipment is more than 7 years old from your purchase date to when you brought it in South Dakota, then we're not going to worry about the use tax on it. At that point, it would, from our perspective, depreciate so much that we're not going to deal with it. Now, if it's less than 7 years, a use tax may be owed, but will be a depreciation on that based on the age of the equipment there. Generally, we'll go off of either what the current Blue Book value is for the item, for the age, or if that doesn't exist, a 10% discount off of the purchase price for each year of the equipment you had the equipment before it was brought to South Dakota. So let's say, for example, you bought a skid steer in Montana, so obviously we're in charge sales tax on it. And you had it for 3 years before you had to move to South Dakota and use it for your landscaping business. We would take, if there's no Blue Book value for a 3-year-old skid steer, you would take 30% off of its purchase price, determine what the use taxability would be on that. It's one of those things where it kind of surprises people on that. I've had it may be a large sticker shock on that, but this is one of the things where this is us playing fair for everyone else, that they're not trying to shop from all our states and bring stuff in there where people would have been in South Dakota and bought the skid steer they would have thought that sales tax applied anyway. It's not, it's to prevent any of those loopholes from happening in that situation. So I mentioned about a little bit about this, but for state and even municipal taxes, it's based off point of receipt or where the customer is getting the item. Now, for physical items, it's generally pretty easy. We'd use either delivery address or the location you pick it up. So if you go to Books a Million, you're buying a book there in Rapid City, easy. You're at 6.2% because you got in Rapid City. Now, if you're getting let's say you're going to Books a Million's website, you live in Rapid City, but you're in the book shipped over to someone in Sioux Falls. They're going to use that Sioux Falls delivery address. They're still going to charge 6.2%. That's easy enough there. Digital items, on the other hand, get a little bit trickier on this. For digital items, we generally make the assumption that the customer is going to receive the item either in their personal home, if it's a personal, if it's just a normal person, or from their business address, if it's a business that's making the purchase for digital items there. So, for example, a photographer that's hired by a construction company to make some pictures to put on their website, the more likely the photographer is just going to take all these pictures, then email it to them. They would use the business address for the construction company to determine what that tax rate would be. However, if the photographer fails to capture a business address for them, because they say email inquiry, they just do everything by email, and they forget to ask, hey, what's your billing address? If they forget to do that, then the photographer in that example would base off their own personal or business address to determine that a potential city tax taxability. Now, one thing that kind of makes sense from this is everything I've talked about, assuming that the item is being received in South Dakota or is being delivered to South Dakota. If the customer is outside of South Dakota, our jurisdiction, South Dakota sales tax doesn't apply unless you have that state's tax license. You can't charge theirs either. So if you're a photographer and let's say the construction company is over in North Dakota, but you're a South Dakota photographer and they're doing all the work from, then even if you're going over the state to make takes pictures, but they're not going to receive the benefit of your pictures until you email it to them from your comfort of your own home, and they're going to get into their office in North Dakota, then South Dakota sales tax is required. Now, if you physically do it on receipt for work, they may require you to get a tax license in that state. But if let's say you do everything remotely, maybe you're a graphic designer, you just create the image for them, then yeah, that would probably be a non-taxable thing. And no reason where, yeah, you may be, that business may owe you tax for it, but that'll be between them and their state. You don't have to worry about that on your end because you don't have that state's tax license. And as I mentioned before too, the tax license, disappearing, breaking over everything that, yeah, based on where you receive it, this includes certain situations too, such as leases of items. Let's say, for example, you are in the dumpster rental business and so a construction company rents a dumpster from you. They're in Rapid City for the first month, but then say, hey, we want to use this from, we're not full with this, but we got a job over in Belle Fourche, South Dakota. They bring it over to Belle Fourche on their own end. Okay, we're going to change the taxability for that dumpster now into Belle Fourche for the next billing month because that's where the item is in that situation. The other thing that may change too is if you're in the service-based industry, like again, house cleaning is a common example. Yeah, you may be charging sales tax, potential city tax all over the place based off again where the home is. That's kind of where they get the benefit of that. So that's when you're trying to determine your city taxability. That's what one thing to double check is where are they getting the benefit from it. There's a few things that make things kind of awkward, like the photos, but in general, if you see where they get the item or where they're receiving the benefit of your item. So does anyone have any questions on either state sales tax or municipal tax before we talk about some more exemptions? This is where Denise is going to kick in and we have optional break if people want one. And it's okay if you guys don't have anything. My apologies. I do know I tend to talk kind of fast with things, but that is a-okay because we got a lot to talk about. And I want to make sure we have lots of times for questions if you guys need it. So do everyone feel like you just want to power through or do you want to take a short break?
Let's take a 10-minute break and then that can give you some time to think about maybe questions you have and go ahead and put them in the chat and then we can answer them before we start the second part. But let's just take a 10-minute break.
Sounds like a great idea, Denise.
I gotta
All right,
take my
well-
dog. I gotta take my dog out. So
Oh, well, you have fun in your break then at least. All right, take
Okay.
care, everyone. We'll see you shortly.
You need some help over there. You got it.
Okay, let's get started. Introduce myself first, and then I will touch bases on the 3 questions that we received during the break. My name is Denise Lickness. I work based out of the Aberdeen office. I am located in Watertown, hence having to take my dog out. I do work out of my home, and I do have a 95-pound yellow lab. So this is my house. That's why I had to run and take him out, because otherwise he'd be bugging me during the presentation. But I'm going to go ahead and read the questions that we have out loud. It just helps. Someone else may have something very similar. So first of all, I am just starting a business with my artwork. At this point, I only have 2 craft shows lined up, one in Minnesota, one in South Dakota. That will be for 2025. That'll be it for 2025. You do have a tax ID. Most of what you said has gone right over my head. Can you direct me to somewhere that could help me know what steps I need to take to make sure I have reported and paid taxes correctly? Becky, first question I have for you is, I assume that you, or a statement, I assume that you have a South Dakota sales tax license. If you have a South Dakota sales tax license, first of all, the Minnesota show would not be subject to South Dakota tax, so we wouldn't be addressing that. The South Dakota Craft Show would be subject to tax based on the location. So it's state tax of 4.2, whatever city, let's just say it's Madison. Madison's tax is 2%. And then there is a tourism tax, the 1.5%. That is what would be due on craft fairs, because as David had said, it's a special event. So that's where that would. If you do not have a South Dakota sales tax license and you've just been filling out the vendor forms, that is fine. But if you do 2 or more shows in a year, you probably should have a South Dakota sales tax license for your benefit, because once you have that license, you'll be able to use that to buy the product in your artwork, if it's canvases or if it's pictures, that type of thing that you are reselling. If you want to speak to somebody, you can always call our toll-free number. They can walk you through a lot of that good information. If you are located in Sioux Falls or Rapid, you can call, or Pierre, you can call, or Aberdeen, you can call the agent, an agent there, and they can walk you through it too. I hope that helps. I know taxes are overwhelming. It really is. Some of us love it. Maybe we're crazy. I don't know. The second one says, second question, maybe you will touch on this in the exemption section, but this is a question I have. Say, for example, you purchase raw materials, 2x4s that are used for an end product that is sold, and you purchase the materials without an exemption because you don't intend to resell it. So I assume if you're not reselling it, you're keeping it for yourself. Okay. Then you later end up selling some of the 2x4 inventories to a customer that needs it. How is that handled? Do you end up charging sales tax on it again? If you are in a business and you are selling items, then yes, you would charge sales tax on it again. If you purchase the 2x4 for your own personal use and you don't have a business and you sell it to your buddy down the street, no, that's occasional sale and tax would not apply to that. Okay, oh, we got a few more.
Well, actually, one thing, Denise, just to chime in here, now there is a situation, I think, where you're that William was trying to get into as well too, is that if you buy something with sales tax applied, let's say, for example, you want to be a baker, you're going to be baking some products, you buy so you agree sales tax exempt because you didn't have a tax license at the time, then you get South Dakota sales tax. So now you get your products tax exempt. That doesn't free you from not charging sales tax to those purchases made with the items that were taxed. You still have to charge them sales tax anyway. So yes, technically that means maybe the flour and stuff may have sales tax applied twice, but that's because it was legal for you to, it was appropriate for you to buy that with sales tax in the first place because you didn't have the exemption certificate at that time.
Okay. And then the question here is, if we have a sales contractor who lives and works from Wisconsin, do we need to pay use tax on his services? Need a little bit further information. If he lives in Wisconsin, that would not be necessary, but you must have a business here in South Dakota. Is that correct, Trina? Just put a thumbs up if that's it. And while I'm waiting for that, Becky, a sales tax license isn't necessarily a tax ID. There are so many different terminologies for tax ID. If you had gotten a sales tax license, you should have had an agent give you a call or send you an email regarding that. So if it's a federal employee identification number, that is a IRS term, and that is not a sales tax license. And that's what he means by EIN. It's a employee identification number, or federal employee identification is the official name for it. But if you have a sales tax license, you should have been spoken to by an agent, or an email sent to you by an agent, and then a license card sent to you. Okay, and then Tom, service provider that is located in Sioux Falls, customer located in Rapid City. Consultations are primarily online and invoices are sent online. Which tax rate applies, Sioux Falls or Rapid? In service and in sales, it's basically where the customer takes possession of the service or the item. So if it's a consultation, it's based on where your customer is taking possession. If they are not coming to your office and it's all done online, it would be where they take possession of the service. Okay. Trade shows. Are individual sellers responsible, or under what situation would the trade show organizer be subject to sales tax for an individual seller's sales? Okay, when I go to a trade sale, you've got a vendor organizer that handles it. And then each of the individuals at the trade show would be responsible for their own sales. And if they're coming into the state, they're establishing a physical presence or nexus, and would be required to be licensed and tax due. Okay. Let's jump into exemptions, because I'm sure there'll be 100 questions on exemptions. There always is. But I'm going to start out with a little story, a little fun story. Exemptions basically are buying things without tax. And I've been working with the department for 26 years, almost, just about. And when my daughter, who's an adult now, was young, she heard me talk about taxes all the time. Yeah, children get kind of bombarded with that noise, but I talked about taxes all the time. I talked about exemptions all the time, and my kids listen. So her dad and I would get together on their birthdays, and they'd all get the money put together, and they were able to save a portion, and then they could spend their money on something. So when she was about 10 years old, we took her to, I think it was Walmart at the time, and she picked out an item that was $10. She had $10 to spend. So it was kind of a learning curve that I was kind of looking forward to. So she takes it up to the counter, and she hands the cashier rings it up and told her $10.62. And she said, no, it's $10. And I just smiled and I shook my head for the cash register. She goes, yeah, but 62 cents is tax. And she goes, oh, no, no, no. My mom is a tax lady. She's tax exempt. That is something that I'll remember. And my daughter is now 36 years old. So that tells you something. But tax exemptions, and there's 3 reasons a sale may be exempt from sales tax. One of them is the purchaser or the product or service is specifically exempt. And we will go in detail in the rest of the presentation on each one of these. So the product or service is specifically exempt. The purchaser is exempt. I am not exempt. I'd explain to her, I am not exempt. The product or service is used for an exempt purpose. So if you as a business do not receive a properly completed exemption certificate, then collect the tax. And this is the exemption certificate, a copy of the exemption certificate. What is actually required on the certificate is the purchaser's name, address, ID, sales tax number, if it's required by the state where the sale is sourced. The type of business, the reason for the exemption, a signature is very important if it's a paper copy. If it's not a paper copy and it's electronic, that is not required. You can obtain this at our website. We do have these forms on there, or you can obtain them from any office or call, and they will email you one. You can make copies of these exemption certificates. What's very important when you receive an exemption certificate is to make sure that the permit numbers do not contain a UT or ET. UT is a use tax license, and an ET is a contractor's excise tax license. A contractor cannot purchase items without tax, so those are invalid. If you obtain a use tax license, you've obtained the use tax license in order to pay tax on items. You're not able to buy things without tax. For example, and that would be like a chiropractor or even a clinic. They normally have use tax license because they are required to pay use tax on their equipment. You must keep the exemption certificates in your records for the last 3 years. The rule of thumb is the last 3 years and the current year. Exemption certificates do not expire, but the thing is with an exemption certificate, you must verify, kind of look at it every once in a while. I recommend yearly, just to make sure that nothing has changed on it. The corporation hasn't dissolved or they haven't changed hands, that type of thing. So just make sure everything is update. If the purchases are from a state that does not issue the permits, they may use their driver's license, their FEIN number, or state issued ID number. And how you report it on your return with an exemption certificate, you include it in the gross in the first line, and then you deduct it under non-taxable. Some examples of exemption certificates. Agricultural products, and we'll get into that a little bit later. Educational services. If you are a tutor, your services are not subject to sales tax. That's even if you have your own business where you tutor, that is not subject to tax. Food stamps, WIC, forestry departments, healthcare services. Where I talked about the clinic needing a use tax license, the services are not subject to tax. Livestock, but that does not mean dogs or cats. If you are selling animals, a breeder, that is a taxable business and you would need a license. Motor fuel, motor vehicles, prescription drugs, social services, travel agent services are not subject to tax, but if the travel agency sells items, baggage tags, baggages, pillows, that type of thing, they would need to be licensed. Trucking and water for domestic use. Exempt entities. Governments, including South Dakota Public Schools, municipal or volunteer fire or ambulance. I get that question a lot of times about a volunteer fire department. They are exempt. Tribal governments, they're just like the federal government. They are federal government. They're just like the state, city. They're a government and they are tax exempt. Nonprofit hospitals. Believe it or not, there are a couple hospitals in South Dakota that are for profit. The Heart Hospital out of Sioux Falls is, and I think there's one in Rapid too, isn't there, David? Isn't there a for-profit hospital out in Rapid?
Not that I'm aware of.
Okay, I thought there was one.
Now Stanford's in the area, but I think there might still be marked as nonprofit too, so I don't know.
Okay, so like I said, the Heart Hospital is a for-profit hospital, so that's something you need to be aware of. Religious educational institutions, nonprofit accredited private education institutions, nonprofit charitable relief agencies recognized by the state. And the ones in the asterisks there, they must be registered with the state of South Dakota, and they are required to actually file a application for exemption. The nonprofits, relief agencies are required to do that. If somebody says they're a relief agency, get them to fill out an exemption certificate, or if they're nonprofit, most nonprofits in the state of South Dakota are subject to tax. So that's something you need to be aware of. Unless they are registered with the state of South Dakota, they are taxable. Churches are not exempt from sales tax. They're not exempt from sales or services. So if you're you do mow lawns for a business, say you've got a landscaping business and the church hires you, and they may say we're not taxable, because there are some taxes that they do not pay, but sales tax they do pay. So you want to make sure you do charge them sales tax. Yeah, Black Hills Surgical was for profit, but Sanford just bought them. They're buying everybody. They just bought Prairie Lakes too. So, and just keep in mind too, with the health services, they're not subject to sales tax, but neither is things like you go to a vendor fair and they're selling coins or currency or bullion. That is actually tender. That is money. So that is not subject to tax either. There was a point back 15 years ago that we did tax it. So. Okay, employees or representatives in an exempt entity must pay sales tax or municipal tax if they use a personal check or a personal credit card. An example is we at the state haven't for a couple of years now, but we usually have a statewide meeting in Pierre, and they direct bill. The motel will direct bill the state, and that's not taxable. But if we would stay there and get reimbursed and pay with our own personal credit card, then we would owe the sales tax and then get reimbursed. So that's what it means by employees or representative of exempt entity. If it's a personal check, or I don't think anybody takes personal checks anymore, or personal credit card, then you do pay the tax on it and get reimbursed. Lodging paid directly from the exempt entity is exempt from sales and city tax. So if it's direct billed, so they're sending a bill to actually the state or an exempt entity, and it is being billed, then there would not be any tax on that. Keep in mind, there may be fees that the hotel charges that would not go under the realm of taxes. So government entities must provide an exemption certificate, or the vendor must document to show the purchase was paid from government funds. That documentation can be about voucher or a check stub. A lot of times you don't run into check stubs anymore, but when a purchase is made with a government credit card, an imprint or copy of the card must be kept as documentation. A government credit card has some special notations on it that states that it is a government card. I used to be in the military, and I had a government card that I could use when I was on deployments and when I was on training, and it has a special imprint in there. Exempt transactions. Exempt transactions, sales for resale. Basically, if you are a business, even a crafter or a baker. So you're a baker and you have a license and you go to buy your ingredients. If you are licensed with the state and you've given them exemption certificate, that's a sale for resale, because you're putting those ingredients into the cake or pie or the items there, and you're reselling it. Target, Walmart, all those places, they purchase all their items without tax because they're turning around and reselling it. And when they resell it, then they charge tax. Okay, drops shipments. If you sell something online and you're shipping it out of state, it is not subject to South Dakota sales tax. Keep in mind, you do have to watch your thresholds, because if you do a lot of sales, you're a big business, you do a lot of sales into a city, you may need to get licensed in that city too, or that state. Agricultural, certain repair parts. If you're selling certain parts for a piece of ag equipment and it is specifically for ag use, that part would not be subject to tax. Keep in mind, you buy an implement or a piece of ag equipment, you're paying the 4.2 But when you purchase the parts for that, if it's specifically for ag use, there would not be tax. And if you applied and obtained a direct pay permit, then you would not pay tax. You end up paying tax at a later date, just not at the time that you purchase the product. Businesses can purchase items exempt from sales tax if they sell, rent, lease these items as a normal course of their business. In leasing, if they're purchasing that item and they're going to be leasing it out, then they would be able to purchase that without tax because they would tax the lease. Items that can be purchased for resale if they become part of the final product. You're purchasing items that are going in, you're building something, machine shop, that type of thing, and you're building it, becomes part of that, a manufacturer becomes of that product, you can buy those items without tax. And then service providers must pay sales tax on all products and services they purchase unless there's a specific exemption for that. We're going to talk about manufacturers. Manufacturers are able to purchase raw materials. So the stuff they're making stuff, they're actually making stuff. So anything that they're purchasing that goes into the items they're making, it becomes a part of the item. So they can be purchase exempt as items for resale. Containers can be purchased without sales tax. They've got to put these in something when they ship them out. So the examples of some of the containers are labels, packing cases, wrapping paper, tape, bottles, and bags. So on this slide, it basically shows you what is taxable versus what is non-taxable. We kind of talked about a lot of this stuff in a manufacturer, component parts, labels, welding wire. If you're a welder, you can purchase the wire or the rods without tax. But you have to pay tax on their gas, your oxygen, your acetylene. You have to pay tax on that. Pallets are not taxable, containers, raw materials, component services, and prescription safety glasses. By prescription safety glasses, if you cannot see and you have to have special ones, they are not taxed, just like prescription glasses are not. What is taxable? Operating expenses, sandpaper. We talked about the oxygen, the acetylene, electricity, prototypes, and molds. Years ago, this goes back years ago in an audit, and the prototypes and molds are subject to tax. If the customer is providing the prototypes and the molds, you need to make sure that tax is paid on those, or the manufacturer is the one using them, and the manufacturer will owe use tax on them, even if they were not purchased by the manufacturer. That was a big audit that was done years ago. Consumable services, repair, and safety glasses. You can buy safety glasses in bulk, and they are subject to use tax if sales tax was not paid when purchased. Services purchased as part of the manufacturing process may be purchased for resale, but they do have to meet 2 criteria for the purchasing services for resale. And I'll give some examples on this too, because it's a bunch of words. Purchaser of service does not use the service in any manner. So the one purchasing it is not using it. Service is delivered or resold with no alteration. When I first looked at that 100 years ago, I looked at that's just a bunch of words. So we need some examples to kind of help it out. So I'm going to give you some, I go by examples. A manufacturer hires a painting service to paint lawnmower parts. So it's a manufacturer of lawnmower parts. The manufacturer does not use the service. The service is resold to the customer without alteration, and the manufacturer may purchase the painting service without tax. But you must provide the painter with an exemption certificate so that they would not charge you. If you are a painter and they do not give you the exemption certificate, then in this case, charge them tax. Okay, the opposite, okay, this would not be, you would not be able to buy the services for resale. A lawnmower manufacturer contracts with an engineer to design a brand new lawnmower, state of the art, wonderful. The manufacturer cannot purchase the engineering services for resale because the design does not become part of the mower. It's just a design to actually build the mower. The manufacturer uses the design to create the product. So the engineer's service is subject to sales tax. So he would charge sales tax to the manufacturer. And then the next one, there's 3 criteria for service providers to purchase services for resale. So this is a service provider purchasing another service for resale. Service providers can purchase another service for resale if the service is delivered to a specific customer in conjunction with the services contracted to be provided to the customer. Again, a lot of words. So we'll give examples. A computer software program hires a programmer to customize a program for a specific client, one client. The sale meets the 3 criteria and the service can be purchased for resale. It's one client. Opposite of that, a computer software company hires a programmer to develop a new program. The software company then copies and markets this program to the public. It's not a single client. The software company then copies and markets this. The service is taxable because the programmer's services are being used by the software company and not the client. Containers. I love this picture. I love McDonald's. Not a good thing. I love McDonald's, but containers can be purchase exempt from sales tax if when you get that product, it is in the container. You're buying the product, you're not buying the container. So McDonald's can purchase all their containers, in this case, or pizza, without tax because the product is going to be taxed and sold to the customer. Containers the retailer reuses cannot be purchased for resale. In a case like you go to a restaurant and they have bowls and they have plates and they have silverware or they have trays, those items all have to be purchased with tax. Use tax is due. It's kind of a container, but it's not one that the customer takes out the door. So in this case, in the picture here, the boxes, the bags, the food wrappers, and the cups. What is kind of funny, when you go get a soda at a fast food restaurant and the cup, comes with a cup, there's no tax on the cup, but you drink it out of a straw and you have a lid, those are taxable. Those are use taxable. I was with someone when they did an audit and they use taxed them. Now, most of the restaurant supply stores are, that these people are purchasing these from, know that, and they will tax you on the straw and the lid, but it's kind of weird. Ag equipment, and I know David touched bases on this, a bit here. So when used primarily for ag services, it's subject to state tax and no city tax, and he touched on that. So you can actually buy a piece of farm equipment within the city limits of Sioux Falls and only pay the 4.2. The city tax would not be due on that. We'll touch bases with Mercedes on the question. I have a question on the containers. My company sells farm equipment. Frequently, we have customers come and use paper bags we purchase to collect small parts they are buying from us. Would the bags still be tax exempt in that case? Mercedes, are you purchasing the bags without tax? And if you are, is the customer paying tax on the small parts? Because you should be able to buy the bags without tax if they're to hold the small parts that you're selling to the customer. So in that case, it sounds like you would be able to purchase the bags without tax. Okay, then you should be good if the small parts are being purchased from your customer. It's not, they're not really purchasing the bags, are they? It's just that's the container. Okay, we'll move on. What is exempt from sales tax regarding ag equipment? Sales of parts or repairs on farm machinery or attachment units. We kind of made the deal years ago that if the piece of equipment was subject to tax, then the parts or repairs would not be subject to tax. But keep in mind, it has to be on farm machinery that is exclusively used for farm use. It can't be on a pickup or a truck you're hauling grain with. It has to be one that's actually used for farm use. And maintenance items and maintenance services when used on farm machinery or irrigation equipment. If you're selling seed in quantities of 25 pounds or more, it would not be subject to tax. And that goes for commercial pesticides or fertilizers, commercial fertilizers over 500 pounds. Just to give you a little background on the 25 pounds or more, why that started, there are contractors that will buy seeds. If they're doing work on the road, then they're going to seed the sides of the road as far as even in town. And so if a contractor buys that 25 pounds of seed, they would need to pay tax on that, where a farmer would not. Pesticides, motor fuel, and electricity are exempt as long as the electricity is not supplied to a shop or a home. It has to be to power irrigation pumps. So the parts are exempt. They're parts to farm machinery. Okay. Then you can purchase the bags, even if the item that you're purchasing the bags for are exempt. It's a container. I mean, you're not just going to hand them the parts. You have to have a box or a bag to put them in. Tribal tax collections. Tribal tax collections are kind of handled the same way as city tax. We have 5 tribal governments with sales, use, tourism, and contractors excise tax agreements. Okay, we have Standing Rock, Rosebud, Cheyenne River, Ogallala, and Crow Creek. Okay, so with these agreements, it is very similar to city tax. The state actually collects the tax for the tribes, and then we electronically remit that to them, the ones that we have the agreements with. We have 2 tribal governments with limited tax collection agreements for use and contractors excise tax. That's Yankton Sioux and Sisseton Wahpeton. There are 2 tribals that do not have a tax agreement with the state of South Dakota. That's Flandreau and Lower Brule. And tribal revenue departments have jurisdiction over licenses owned and operated by enrolled members of their own tribe. The state Department of Revenue handles all other licenses. And one basic thing to remember is, even though you're charging the tax, tribes also have other a form Tecro tax, and you'd have to contact them. They also have permits that you need to, when you're doing work on the tribal lands or selling, they also have permits too, on top of what we have, so. Tribes with like limited tax agreements, Yankton Sioux, Sisseton Wahpeton, and there's no contractor excise or use tax agreements with Flandreau or Lower Brule sales. We don't have an agreement with them. Sales of products or services delivered in Indian country without a sales tax collection agreement are subject to the state tax. So if you're selling to the ones that do not have a collection agreement, you would be charging state tax, state and city tax if it's within the city. So sales, and this is a bunch of words too. So basically, sales by an enrolled tribal member on a non-agreement, we're talking the non-agreement ones, controlled by that member's tribe is not subject to state sales tax. So if you are an enrolled tribal member of that tribe and you're selling it to another enrolled member of that tribe, would not be subject to tax. And sales off Indian country are taxable. There was a case where somebody came into Hy-Vee and they purchased a bunch of stuff and they wanted to show their tribal card and be tax exempt. The Hy-Vee was located in Watertown, South Dakota, and they called us and we said, no, you charge them tax. They're purchasing it right here in Watertown. It is subject based on where they're taking possession. So it was not tax exempt. Now, if the government, if it was the tribal government and they were paying with government funds, then it would be exempt. Okay, reporting, I'm going to skip this one and just show you the next slide because it's easier to show you versus talk. Okay, if you have a sale, this sale is in Mission, South Dakota, and there you have a special jurisdiction, 500 sale to Rosebud Sioux Tribe, which is exempt, and 5,000 sale delivered to Pierre. So the total amount on that sale is $6,500 total. That goes in the gross. Okay, there was 500 that was to the Rosebud Sioux Tribe, the government, so that's exempt. 1,000 was delivered to Mission, so that was on Rosebud, so that's an agreement reservation. So the 6,500 and then 500 exempt, then you deduct the special jurisdiction of 1,000. So that brings the state tax down to 5,000, which is subject to 4.2. That's the state tax. That was actually the peer. Okay. And a lot of times years ago, people would stop at that point. But what you need to do is you need to take that deduction of $1,000 and bring it down to the special jurisdiction so that Rosebud gets that tax. They get the $42 and the city of Mission gets also the 20. So that's where you always have to bring it down. We would get projects after the end of the year to correct hundreds of returns that were done incorrectly this way. Now with ePath, it catches it and it flags it as what we call a violation and it gets forwarded to accounting and it gets taken care of right away. Shipping containers are exempt except if you are buying them to put them in your backyard. Because right now, a lot of shipping containers, if you are purchasing a shipping container for a manufacturer's purchasing a shipping container to put their product in, that's exempt. But if you are building a he shed or a she shed in the backyard and they're dropping it off into your backyard, a lot of them are doing that, then they would charge you tax on that. (911) emergency surcharge, and David touched on this just a little bit. This is South Dakota Codified Law 3545, and I do want to refer you to that if this is something that you would be responsible for. The 911 surcharge is $2 per service user line. The provider collects it and remits it. The wireless emergency surcharge is a 2% gross retail sale of prepaid services. That would be like prepaid cards for your phone, that type of thing. They must be registered with the Department of Revenue, and it's reported and remitted only through ePath. You can't do it by paper. You have to do it through ePath. And we do have a wonderful tax facts David was talking about. We've got a lot of different tax facts online. People should check that out because they're being updated almost monthly, I think.
Yeah, I usually just updated one tax facts, which is for delivery charges, now adding more information regarding shipping and transportation too. So yeah, we update these fairly often. They'll be dated when for any changes or the latest iteration of the document too.
And I'm going to just give a shout out to the tax facts, because even as agents, um, I use them too, because they are in plain language. They're not in law language, I call it legalese. And so they're easy to understand. And sometimes you think you know something, and then go and it just like a light bulb goes off with that. So yeah, make sure you check those out. Changes in accounting methods. When you apply for a license, you put down what accounting method that you are operating under. And if you have a change in that, you must request it in writing and send it to email it. Emailing's good to any of us, and we can get that changed. But there are two types of accounting methods. One is accrual, one is cash. Those are the two that we use. Accrual accounting is anything that you have charged, like say in January, anything that you charged in the month of January. And if you're under accrual accounting, the tax gets paid on that January return, even if you have not been paid. So under accrual accounting, it's all charges. The easiest accounting method there is. I'm a daughter of an accountant, and I have a daughter myself that's turned into an accountant, and that is the easiest to do. But the thing about that is, if you charge out, you pay the tax in January, you don't get paid until November. We know how that goes. But you can bad debt for accrual accounting. You can do the bad debts that are here. If you do cash accounting, and a lot of places like bars, restaurants, where they just you pay right away when you leave, they're cash accounting. And the nice thing about cash accounting, there's pros and cons to both. It is difficult to deal with on a monthly basis in your bookkeeping, because you have to space out what was charged, what was paid. So if you're under the cash accounting, the only time you report the tax to the state is when you have been paid. So it's kind of nice because it cash flows a little bit easier, but it's a little bit more complicated on the bookkeeping end. Filing and paying your returns. When you get your license and fill out the application, an agent will actually look at what you put down for an estimated taxable gross. Or when they talk to you, you tell them, no, that's too high, too low. And then it's set up based on how much tax you do in a year. So it can be monthly, bi-monthly, quarterly, semi-annual, or if you're a seasonal business, such as a landscaper, or maybe you do snow removal, you maybe put on a seasonal basis, and that's kind of flexible, just depending on how, because if you just do snow removal, you don't want to have to file every month for the whole year. So that's a little leeway that we have that we can give you, but that's how that is set up. And there may be a case where you start out and you're just doing, just starting out, so you don't have a lot going on. 2 years down the road, you're making money hand over fist. We may change it from filing quarterly to monthly. ePath. I'm from way back before ePath existed. So I'm going to tell you a little bit about Quest. Quest was what we had before. It was an online program. I didn't want to deal with it. It was so confusing. And we didn't have a lot of people that did the Quest. A lot of people would do paper because it was just a lot easier. Now, thankfully, with ePath, we have more people that are filing online than are filing by paper, which is really nice because it's easier. It's easier for the bookkeepers to handle. It's easier keeping documents. Just to go over a few things, it's available 24/7. You can do it 2 o'clock in the morning if you can't sleep. Multiple payment options, allows additional users access to a specific account. It saves it. If you start it at 2 o'clock in the morning and finish it the next day, that's fine too. And you can edit it before you actually submit it. You can change passwords, use a bank account, one-time payment, or save the information. System does all the calculations. Math is hard. It can be hard. So it does all the calculations for you. If you make a mistake, you can amend it online. That's what's really nice too. You don't have to get the paper returns to amend it. You can just do it online. End of the year, when you need a recap of all your taxes that you paid in the year, you easily can just go into ePath and get a history. You can view pending payments, changes to payments up to 2 business days before that it's done. So it's user friendly. It really is compared to the Quest. So when people call, I can walk them through it, and I can actually, if you've started your return, I can actually go in and look to see where you're at on that return and walk you through the rest. Okay, you can pay with a credit card, Visa, MasterCard, or Discover, and you can just go right on there and make a payment. Keep in mind, if you pay with credit card, there's a 2.45 convenience fee. The state doesn't get that. It goes to the credit card company. So that there is a fee for that. So keep that in mind. If you do pay directly out of your account, there is not a fee.
I thought debit cards also had that 2.45
Yes.
processing fee too. Yeah. So it's both a type of card triggers that.
It's it. Yeah, they consider a debit card a credit card. So record keeping requirements. Record keeping, one thing I will say about record keeping, if you keep good records, it makes it easier on you. If you keep bad records and you're audited, then it's not going to be easy on you. Because if the auditor or the agent, if they're doing a review, if they don't have the documents, they can do a jeopardy assessment. They can estimate on what you're doing based on what you've done in the past. So if you keep good records, I went and did a review years ago, and he was a math teacher, which was really kind of funny. He had a summer program, something he was doing in the summer, maybe mowing grass, but during the year, he was a math teacher for the local elementary school or high school. And I went to do a review, and he gets a box out, and it's full of sticky notes. And the sticky notes have figures on it and dates. It does have dates and amounts. So it was organized, but it was sticky notes. I had to go through all the sticky notes. So, but he had documents. So that was something that was good for him. Gross receipts. You need to keep sales and billing invoices, general ledgers. I don't think anybody has cash register tapes anymore, but there's still made deposit slips, statements, contracts, pricing information, menu pricing. For deductions, if you have any deductions, you've got to follow, it's got to be followed with documentation. Resale certificates, proof of exemptions, bill of lading, proof of delivery of where things were shipped to, credit memos, use tax, purchase invoices, check registers, fixed assets. If you had product and you don't have receipts for that, we can assume that you did not pay tax on it. Most cases, if you tell us where you purchased it, we know that whether you did or not. Inventory withdrawals, depreciation schedules. These are the type of things that if you were audited or reviewed, they will ask for these things. So just keep them on hand. And keep these things for at least 3 years. Like I said, the rule of thumb for anything is 3 years plus current. I do know the IRS does require longer than that. I think it's up to 7 years. So it wouldn't hurt to keep them that long, but the state's laws is 3 years. Additional documentations, of course, tax returns. What's nice about ePath, you can just, print up a report, or you can print, even if you actually forgot to print it that day, you can print up a report on that. Schedule working papers, copies of supporting information, worksheets, schedules. One thing I will say, when you amend a return, if you amend a return for a credit, and you're going to be getting a credit, I just got this huge one the other day, we do need proper documentation. If that documentation does not add up, we will deny that amended return. So make sure that when you have an amended return, you have proper, clear documentation. If you send that in with the amended return, it will be a short turnaround. Okay, you can contact us a lot of ways. We have a toll-free number that's staffed by agents, and I have to give a shout out to the toll-free line, the phone bank. They are amazing, these agents. We have email. He had said earlier in the presentation, if you have any questions, feel free to send us an email. I think that's the best way. This email address, our email addresses are fine too, if you have any questions, because then we do answer by email, and then you have a hard copy. I call it a hard copy of that answer. If you ask a question and we answer it and it's wrong, it's right. But keep in mind, if you are audited or reviewed, or you are told that it's wrong at a later date, that's from that point forward. We have a website. It's on there. The chat, I think, David, you're on the chat too, aren't you? Yep, David and I both do chat, and that's where you can ask questions on chat, and Monday through Friday, 8 to 5, and we'll be able to answer that. A lot of people like the chat. I enjoy doing chat. We have that publications tab that we've been talking about. If you go online, and there's tons of publications out there, tons of tax facts, and those tax facts are great for knowledge. We can get that ID for you. I can email you that idea, Alexandra. Okay, these are our offices. We have like I'm Aberdeen, Pierre, Rapids, Sioux Falls, Yankton. It's kind of hard. Watertown used to be in there, but now I am out of the Aberdeen office, located in Watertown, and David, of course, is out of the Rapid City office. But the numbers are all there. You can call any of the numbers or the toll-free line for any questions you might have. And we are on Facebook. We are on X. Most of these presentations are put on YouTube shortly after, might be a week after or so, but there are other presentations that are on there. Keep in mind, if you are not getting the newsletter, let us know what your email address is. We might have the wrong one. Okay, the question that we got in here, a cleaning company in Rapid charges customers one flat rate for a premium cleaning package, which includes labor, cleaning chemicals, and disposable supplies, trash liners, paper towels. They do not break out the items separately on the invoice. Should the entire charge be taxed, or the supplies, or none of it? Is this your business? So they've got a package, and they can do that. But tax is due on everything. When they they don't break out the cleaning chemicals and disposable, because normally cleaning services do not, they don't have that on their bill, but they pay tax on all those things when they buy them. They aren't able to purchase those items without tax. A cleaning business must purchase all of their cleaning supplies and equipment with sales tax or use tax is due, because they're not buying the cleaning products to sell. They're not buying them to resell. They're using them. So those cleaning products should have tax on them when they purchase them.
To kind of follow up with that too, I think we mentioned before that we tax services South Dakota, so of course the cleaning service should be also subject to sales tax on top of everything else. But you also kind of touch upon another concept of, if things are itemized, it makes the whole thing taxable, even if there's non-taxable portions of it. So let's say, for example, I can't think of a good example off the top of my head, but yeah, if it's not itemized out, so we could tell what that.
Car repair shop. Car repair shops sometimes will itemize out their shop supplies. So you get your car fixed. Yep. Yeah. But they came to me once and they said, I paid tax on all the supplies, but I'm charging my customer. I said, no, still the whole thing, you're itemizing it to your customer. That's gross receipts. It's all subject to tax. So if they itemize all this stuff out, even if they purchased all those cleaning supplies with tax, which they probably did because they have to, the whole thing is going to be subject to tax. Right?
Yeah, but that was kind of, I was assuming that's kind of a given anyway. I was trying to think of a situation where someone's buying something to be tax exempt. Oh, I guess, yeah, for some reason you go to a grocery store, you're buying a prescription and at the same time, like, oh, I need some chapstick. If for some reason that pharmacy doesn't separate that, the invoice says, oh, $18 for my prescription, $2 for the chapstick. They say, nope, you charge $20 not itemized. The whole $20 is taxable, even though the medicine should have been tax exempt as a prescription had it been itemized on there. So
Right.
that's where that can make a difference.
Go ahead, David. Yes, they did change.
I do not recall this off the top of my head. I need to look that up quickly because
Okay.
I vaguely remember what you talking about here, but I was out
That-
actually on
th-
leave during that for that particular newsletter, so I don't remember reading it.
Yeah, that did change in July of last year. It used to be, and I have to look into it because, like I said, it's a new thing. It used to be, and this is where I've been here too long because the original one was if you take something out of inventory and use it, when you store it into South Dakota, it right now, as of July of this last year, it is now subject to tax when you store it in a warehouse, and that's how it used to be. And then you take it out of inventory, and then they switched it where it wasn't subject to use tax because you're going to take it out of inventory, and it's but that just changed. So that's one of the things that changes too many times. What do you?
But that's good to know. If we need to get that document updated, then yeah, we'll pass it on to the powers
Yeah,
that be
we'll have to
involved
let
in
them
writing
know.
that. Yeah. So in that case, then
Yeah.
thanks for letting us know about that.
Yes. Was that in which newsletter was that in? Because yeah, that tax facts is a couple years old. So yeah, we will talk to. Oh, so it was just now. It was September's, wasn't it? Yeah, we will let the person, they probably are updating because it just went through in July and it had to go through the legislature. Yeah, you received a number. It went through in July. But I didn't think, yeah.
There is a bit of a turnaround for those. For example, I mentioned that
Yep.
I had a tax fax document I was working on, and I submitted it for approval. I think it was end of September, and I think it should be going live some point later this month. It just between double check with legal, double check and make sure that there's grammatical errors and all that stuff. Then the actual design work for creating the document does take a little bit of time. So it's things might be in the works, but we'll double check in with that team to make sure that yes, this is being updated and just have to be patient there.
Because it was a court case that switched it back to what it was originally back in 2005. So that was 20 years ago that it was originally this way and then they changed it. So, yep, everything's changes.
And that's why we
So
do this
are there-
quarterly too, because there are updates all the time here. So yeah, feel free to check. In a couple of years, you feel like, yeah, I need to get more tax stock in. You feel free to reach out to one of these seminars and something like that, and yeah, we'll tack the talk sprees with you.
Yep. So are there any other questions? I am going to, and I'll have David do that too, put my email address. I put my email address right there. If you have any questions later on that you want to, David put his, feel free to reach out to us, or, in the presentation, there was a biz tax state.sd.us that you can surely send a message to also.
I'm not sure, Brenda Lee, regarding the effective date on this change, because I'm not sure if the court ruling was effective immediately, backdated, or might be sent for future date. Again, now just came back from leave, so this is news to me.
In the newsletter, it does set effective immediately, so I'd say effective November. Well, unless oh God. Yeah, I'm sure it affects a lot of people's businesses. So I think we'll conclude with that. And like I said, you got our email addresses, you've got all that information and the documents. Feel free to reach out. And thank you so much. You guys had a lot of good questions. I like it when there's questions.
Thank y'all for your time. You take care. Have a wonderful rest of the day, and some of you guys might probably be seeing you on Thursday.